What's going on, guys? In today's video of Should I Invest, we're going to be talking about Roblox, a name that has been popular in the last year or so, and everybody is really wondering if they could invest in this name in the long term. So we're going to do that research today. We got our MARKETSMITH tool right here, handy dandy tool giving us all the fundamentals and information that we need about a certain stock to make a sound fundamental decision on whether we want to invest in that in the long term. All right, we got our handy dandy Excel sheet. And we have our Yahoo Finance. All right, so let's dive right in. We're gonna put in Roblox as a ticker right here. Perfect. So right off the bat, we have a negative EPS, which I'm not surprised by, and because of that, we have no EP. All right, so let's go look at return on equity. All right, well, we're here. We're gonna look to the left side right here on MARKETSMITH, and we're gonna take a look at return equity. All right, so return on equity, again, that is an A because we don't have a positive EPS. All right, so now we're going to look at total debt to total asset ratio. All right, remember, we need to know how many times can we pay off our debt with our assets. So we're going to go to total debt. We're going to go to here. Let's pull up financials. Let's go to balance sheet, and we're looking at total debt to total asset. All right, so we have total asset right there. I'm going to take that number, we're going to plug it in, and then we have our total liabilities. Take that and we're going to plug it there. Perfect. So right off the bat, we do have a positive number. If we sell all our positive total assets, we could take care of our total debts. All right, so that's a good thing. Now let's go and look at current debt versus current asset. Right, so we have the numbers right here, current asset, we're going to plug in right there, and then we have total current liabilities. Again, this is going to be a positive number right there, and very easy. As long as your assets are more than your debt, your current debt to asset ratio will be a positive. All right, now let's look at operating income versus total revenue. All right, to do that, we're going to go to income statement. All right, so total operating income right here. So we're operating at a loss right now. That's why EPS is negative, and we got total revs. All right, so let's look at total revenue right here. All right, so we're going to plug that right there. So at the moment, this does not look pretty at all. All right, we have a minus 42%. This is pretty steep. It almost lines up with up here we had Jumia. So a little bit of a growth name. Because of that, the numbers are not really adding up. But let's keep going. Let's take a look at cash flow. Is the cash flow increasing? So the cash flow was increasing up until 2021. December 2022 significantly dropped. So we have to get to the bottom of why that was. But as of right now, we have to say that the cash flow is actually decreasing. Right? Now let's take a look at owned by management. How much does management really own from this company? All right, to do that, we're going to come right here, and we can see a whopping 21%. All right, guys, just looking at the sheet that we have, usually most management ownerships is around 3 to 4%. All right, we had a big one here on, let's take a look. This was Tesla. All right, Tesla had one of the biggest ownerships up until today, and now we have management on Roblox matching that with 21. All right, now we got to see, are the fund ownerships increasing or decreasing? And to do that, we're going to come right here, and something very interesting you can see here: 19.6, 344, 412, 656. 563, 778, a big jump in summer 2022, 902, and December 969. So something to keep in mind, funds are drastically increasing their position size of this stock. We did get a fail, but remember, this is a growth name, so the fundamentals are not necessarily going to add up right now. But what you could know and what you could really rely on is a few things. One, cash flow was increasing up until last year. Funds are still increasing, right? So maybe do some research and understand why that big drop on cash flow happened, but also take a look at what's going on in the chart here. We went from 140 all the way down to the 20s, and we're starting to look like we're doing some sort of a double bottom here, right? If we break above this 50 psychological level, we could see a nice push through. Not to say this will happen anytime soon. This is the weekly chart, but to start here, you know, have a position size there. Obviously, with growth names, you want to position your portfolio accordingly, but start there, cost average at around 30.23, and then have room for another add in case it does pull under that 20 figure anytime in the future. And then you're positioned nicely in a company that fairly, you know, ownerships are loading up here in December and September, which is right around December down here, right? So they loaded up down here, and of course September they loaded up somewhere in here as well. All right, so hopefully you guys did find value in that. If you did, appreciate a subscribe and a like, and comment down below the next stock you want me to do. Thank you for watching. I will catch you on the next one.